gold bar glows under white light. Clean, heavy, timeless. The kind of thing people run to when the world starts shaking. So here's a twist. The Middle East is still on edge. The US and Iran are still circling each other. Oil traders are still watching every headline like it could set the map on fire. And gold? Gold is easing. That should not happen. Not like this. Because this isn't really a story about a metal. It's a story about fear, about power, about a market so addicted to headlines that it now trades hope before hope is real. And that is where this gets dangerous. This isn't what it looks like. On the surface, the headline is simple. Gold slips as investors wait for clarity on US-Iran talks. But underneath that headline is a much darker truth. Gold is supposed to be the panic button. The bunker asset. The thing people buy when trust dies. So if gold is backing off while war fears still exist, while diplomacy is still uncertain, while one of the world's most sensitive oil choke points is still hanging over global markets, then the market is telling us something brutal. Traders are no longer pricing reality. They are pricing the possibility that reality might calm down. Maybe. If the next meeting happens, if the ceasefire holds, if the oil keeps flowing, if the headlines behave, that is not stability. That is anxiety wearing a suit. And the numbers make it worse. On April 21, spot gold slipped 0.5% to about $4,795.51 an ounce, with US gold futures down 0.3% to $4,814, as investors waited to see whether US-Iran peace talks would actually go ahead. Reuters also reported that gold had already fallen about 8% since the US, and Israel launched strikes on Iran in late February. That is the shocking part. One of the world's favorite safe havens was falling even after a major regional shock, because traders were already leaning toward the next headline, not the last explosion. Reuters. And why does this matter to everyone? Not just traders staring at charts in London or New York. Because this drama sits on top of the Strait of Hormuz, the most important oil choke point on Earth. In 2022, about 21 million barrels a day moved through that corridor. Roughly 21% of global petroleum liquids consumption. Around 1/5 of global land trade moved through it too. If that artery closes, the shock does not stay in the Gulf. It races into fuel prices, shipping costs, inflation, politics, food, and eventually your wallet. US Energy Information Administration. So no, this is not a niche commodity story. This is a story about how a whisper in Tehran can hit a gas station in Europe. How a handshake in Pakistan can move bullion in Singapore. How a ceasefire rumor can erase billions in fear until the next rumor arrives. And to understand why gold is easing now, you have to go backward. Way backward. Because US-Iran tension did not begin with uranium. It began with memory. In 1953, the CIA backed the overthrow of Iran's Prime Minister Mohammad Mossadegh. For many Americans, that sits in a history book. For many Iranians, it sits in the bloodstream. Then came the Shah, Savak, repression, revolution, the 1979 US Embassy hostage crisis, broken diplomatic ties, sanctions, the 1988 downing of an Iranian civilian airliner, the axis of evil speech, and decades of mutual suspicion hardening into doctrine. This relationship was not built on trust and then damaged. It was built on injury and then armed. PB's news hour. That is why every new round of talks feels less like diplomacy and more like two men trying to disarm a bomb while arguing over who built it. Then came the nuclear file. In 2002, revelations about facilities near Natanz in Iraq pushed Iran's program into a new global spotlight. In 2006, the EIA referred Iran to the UN Security Council. Sanctions followed. In 2009, the secret Fordo facility deepened mistrust. Then, finally, a breakthrough. The 2013 Joint Plan of Action, and in 2015, the JCPOA, the deal that was supposed to freeze the clock. Iran accepted limits and inspections. Sanctions relief followed. For one brief moment, the machine slowed down. Arms Control Association. But this is where everything changed. In May 2018, Donald Trump pulled the United States out of the JCPOA and reimposed crushing sanctions. A deal that took years to build was ripped apart in a single political decision. Then Iran began stepping away from its own limits. Not all at once. Piece by piece. Limit by limit. Confidence collapsed, and the logic of restraint collapsed with it. Arms Control Association. That is the real backstory behind gold today. Because gold is not reacting to one meeting. It is reacting to a graveyard of broken meetings. Every chart now carries the weight of that history. Every price tick whispers the same question. Why should anyone trust this time to be different? And yet markets keep trying. Earlier this year, investors were already watching US-Iran talks for signs of de-escalation. On February 26, Reuters reported that gold was little changed ahead of indirect nuclear talks in Geneva, with traders waiting to see whether the negotiations could ease geopolitical tension. The market was not asking whether the underlying conflict was solved. It was asking whether enough calm could be manufactured for long enough to justify one more repositioning. Reuters. That's the first core truth in this story. Gold is not pricing peace. Gold is pricing the chance of a pause. And a pause is a very different thing. A pause is fragile. A pause expires. A pause can be shattered by one missile, one sanction, one speech, one leak. Which brings us to the first major problem. Section 1. The market is trading headlines, not outcomes. Mini hook. The gold market looks calm, but the calm is fake. Reuters reported that investors were waiting for clarity on whether US-Iran talks would happen in Islamabad and whether the ceasefire would be extended. Analysts said that if talks go ahead and a broader peace deal emerges, oil would likely fall. But if those hopes fail, volatility could return fast. In other words, the market is balanced on conditional sentences, not facts, conditions. If, whether, could. That is not conviction. That is suspense. Reuters. Think about how insane that is. The metal that people treat like eternal insurance is now reacting minute by minute to diplomatic scheduling. Not to a signed agreement, not to a verified peace, not to a rebuilt relationship, to the possibility of a meeting. That is like pricing a house, because you heard the fire trucks might arrive. And when markets do that for too long, they create a dangerous illusion. The illusion that the worst has been avoided, when all that's really happened is a temporary reduction in visible panic. The fear didn't disappear. It just changed clothes. Section 2. The Strait of Hormuz is the knife at the throat. Mini hook. If talks fail, this is where the world feels it. Oil fell more than $1 on April 21 as investors reassessed supply risks and bet that peace talks might allow more supply to flow again from the Middle East. But just one day earlier, both Brent and WT had surged after Iran shut the Strait of Hormuz again, and the US seized an Iranian cargo ship as part of its blockade of Iranian ports. Reuters also cited analysts warning that if disruption lasts another month, prices could move toward $110 a barrel in the second quarter. Reuters. That is the second truth. The gold chart is not just a gold chart. It is an oil chart in disguise. Because when Hormuz is threatened, oil jumps. When oil jumps, inflation fear jumps. When inflation fear jumps, central banks get nervous. When central banks get nervous, rate expectations change. And when rate expectations change, gold can either explode higher or stumble, depending on whether investors fear inflation more than they fear tighter policy. That's why this story feels contradictory. War can push gold up. Higher oil can support gold as an inflation hedge. But higher oil can also delay rate cuts, which hurts non-yielding assets like gold. So gold becomes a battlefield of competing fears. Geopolitics says buy. Rates say wait. The dollar says be careful. And traders sit there trying to decode which fear is stronger. It's like watching a man drown while 3 lifeguards argue over the tide. Section 3. The talks themselves ARE built on contradictions. Mini hook. Even if the room is quiet, the disagreement is still screaming. The current negotiations remain fragile because the sticking points are fundamental. According to Al Jazeera's explainer on the latest round, technical talks focus on the machinery of sanctions relief and what exact nuclear constraints would be tied to it. Iran wants sanctions relief and guarantees that the US will actually stick to any agreement. The US wants tighter constraints on Iran's enrichment. Iran says it does not seek a bomb and has long pointed to a religious decree against nuclear weapons. But the trust deficit is massive, especially after the US withdrew from the 2015 deal. The argument is not just over uranium. It is over credibility itself. Al Jazeera. And that is why every optimistic headline has a shadow attached to it. Because what does progress even mean here? Progress for Washington might mean stricter verification. Progress for Tehran might mean enforceable sanctions relief. Progress for markets might mean no missiles for another week. Those are not the same thing. That is not one negotiation. That is 3 negotiations happening at once. One for governments, one for domestic politics, and one for traders. And the traders' version is the most impatient of all. It wants instant clarity in a conflict built over generations. Good luck with that. Section 4. Gold is also a vote against the system. Mini hook. Here's where the story gets bigger than US-Iran. Even with recent price swings, the deeper trend in gold is still powerful. The World Gold Council says central banks bought 863.3 tons of gold in 2025. That was below the more than 1,000-ton pace seen in each of the previous 3 years, but still far above the 2021 average of 473 tonnes. Poland alone added 102 tonnes. China added 27. Kazakhstan added 57. This is not retail panic. This is state-level behavior. Institutions that issue trust are quietly buying insurance against the collapse of trust. World Gold Council. Let that sink in. Central banks, the guardians of currencies, the referees of monetary order, keep buying gold in huge quantities. Why?